Now let's look at a downfall stock which has literally wiped out investor wealth, and let's see if we can identify some red flags to find in stocks that are currently in the markets, and to help you identify such stocks and to stay away from them. So Unitech is one such story where the stock rose and then disappeared out of trading in the coming years. So let's see what led to the downfall of Unitech and how the company went from being at a high of 547 rupees at one time in 2008 to falling and literally disappearing in the recent years. So Unitech was started by Mr. Ramesh Chandra, who is an IITian, with the aim of offering premium properties to the buyers in 1971. The company got major infrastructure projects and high-end malls that it had to construct in the north of India in the Delhi region. The company was doing quite well and was highly confident and highly buoyant on the back of the real estate boom that had started hitting India by then. The company stock price and the company revenues both rose to high levels, and around 2007-2008 the company stock was also at an all-time high of 547 rupees. The stock price was highly inflated and did not match the fundamentals of the company. What happened post that, post the real estate boom that bust, the stock price and the revenue both fell to very, very low levels. The real estate bubble was a major blow to the business, since the business was entirely dependent on the real estate, and when real estate market was hit badly, the entire business went bust. At that time, the management decided to enter the telecom sector, a completely unrelated sector to their current business model. They tied up with Norway's Telenor brand, earlier Uninor brand, to set up a JV in India, offering telecom license or telecom connections to the youngsters of India. They targeted the young growing demographics of India, and they chose to bribe the government officials for the 2G licenses. They were caught soon after in the 2G scam in India, and the promoters and the management were jailed for this act of theirs. This is what really led to the downfall of the company, from being at an all-time high to going to almost disappearing into the disappearing and wiping off the investor money. So if you look at the financials of this company in the last 5 years, you will see that most of the indicators have been going negative, especially the earnings per share, which has been reducing, or the dividend yield has always been zero, which is definitely not a good sign, because either the company is moving towards a positive dividend yield, so it's from a growth company to a maturing company. It definitely has to increase its dividend output to the investors, or it has to be transparent about how or where it's the profits being invested. The debt to equity ratio was normal, but definitely the return on equity was low, was getting into negative. So clearly a company that is that has to have certain red flags and should not be looked at as a potential investment. So stocks like these can be easily found if one goes deeper into the balance sheet or into the management backgrounds or the management vision. If one dares to question certain key fundamentals or certain key ideas, it's very easy to identify the stock. No matter, even if the stock is going up, it's definitely relative to certain other aspects of the sector. Like in this case, the stock went up only because of the boom that came into the real estate market, driving the revenues up, driving the stock up to inflated levels, which are artificial and which are not real and are not supported by the fundamentals in the company. So beware of such red flags. Question the key indicators in the company always, and do not follow stock rumors, or do not get into the herd mentality of buying a certain stock just because it's driving up and it's just going up, because you never know when the stock falls or crashes, when the larger economy may crash. It's like in this case.